Imagine waking up one day, opening your trading app, and seeing your account balance almost wiped out. Not because the market was impossible, but because of simple mistakes you didn't even know you were making. This happens to thousands of Forex beginners every single day. They start excited, full of hope, dreaming about financial freedom. And within weeks, they lose most of their money. Not because Forex is a scam, but because no one warned them about the silent mistakes that slowly destroy accounts. PO. If you're new to trading, what I'm about to share could literally save you months, even years, of frustration and losses. And before we go deeper, if you want to learn smarter trading strategies, real market insights, and beginner-friendly guidance, make sure you hit like and subscribe right now. On Forex Trading Rocket Signal, we break things down in the simplest way possible so you can grow faster and avoid the painful lessons most traders learn the hard way. Let me tell you something important. Every successful trader you see today was once a beginner who made mistakes. The difference is, they learned from them. But many beginners repeat the same errors again and again because they don't even realize what they're doing wrong. The first and most common mistake is jumping into trading without understanding risk. New traders are usually focused only on profits. They think about how much money they can make, not how much they can lose. And that mindset alone is dangerous. In Forex, protecting your money is always more important than growing it. If you don't control risk, even the best strategy won't save you. One bad trade, just one, can erase weeks of progress. Another mistake beginners make is trading too much. Overtrading feels productive. It feels like you're working hard, chasing opportunities, staying active. But in reality, overtrading is often just emotional trading in disguise. Many beginners think more trades mean more profit. But experienced traders know the opposite is often true. 2. The more you trade without clear reasons, the more mistakes you make. The market doesn't reward activity. It rewards patience. Sometimes the best trade is no trade at all. Then there's the trap of using too much leverage. This one is especially tempting because leverage looks powerful. It feels like a shortcut to fast money. Brokers make it easy. With a small account, you suddenly control huge positions. It feels exciting. Until the market moves slightly against you, and your account drops faster than you imagined possible. High leverage magnifies everything, not just profits, but losses too. Beginners see leverage as opportunity. Professionals see it as responsibility. Another silent account killer is trading without a plan. Many beginners open charts, watch price moving, and jump in based on what feels right. Maybe they saw a candle pattern. Maybe an indicator looked interesting. Maybe they just had a gut feeling. But trading without a plan is like driving without a destination. You move, but you don't know where you're going. A real trading plan defines when you enter, when you exit, how much you risk, and why the trade makes sense. Without that structure, emotions take control. And emotions are terrible decision makers. Speaking of emotions, emotional trading is one of the biggest reasons beginners fail. Fear makes traders close winning trades too early. Greed makes them hold losing trades too long. And frustration leads to revenge trading, which is another dangerous mistake. Revenge trading happens when you lose money and immediately try to win it back with another trade, often bigger, riskier, and rushed. In that moment, you're not trading the market. You're fighting your emotions. And emotional battles almost always end with bigger losses. Another common beginner mistake is relying too heavily on indicators. Indicators can be helpful tools, but many new traders treat them like magic signals. They fill their charts with lines, colors, oscillators, and alerts, until the screen looks confusing instead of helpful. More indicators don't mean more accuracy. Often they just create noise, price action, the actual movement of the market matters more than stacking multiple indicators that all say different things. Many beginners also skip demo trading or don't take it seriously. They want real profits quickly, so they rush into live trading. But demo trading is where you build discipline, test strategies, and understand how the market behaves. Without practice, live trading becomes expensive learning. And trust me, market tuition fees are not cheap. Another mistake that hurts beginners is blindly following signals without understanding the reasoning behind them. Signals can be useful, but if you depend on them without learning how they work, you never develop real skill. And if the signals stop, or the market changes, you're left confused and unprepared. Smart traders use signals as guidance, not as blind instructions. Then there's the problem of unrealistic expectations. Many beginners believe Forex is a fast path to wealth. Social media makes trading look easy. Luxury lifestyles, quick profits. Dramatic gains. But real trading success is built slowly, through discipline, consistency, and learning from mistakes. When expectations are unrealistic, frustration grows quickly, and frustrated traders make poor decisions. Another mistake beginners rarely notice is not keeping a trading journal. This might sound boring, but it's powerful. Without tracking your trades, you never truly understand what works and what doesn't. A trading journal turns experience into learning. It reveals patterns in your behavior or strengths, your weaknesses. Without it, mistakes repeat silently. Many beginners also ignore market news or misunderstand its impact. Major economic announcements can move the market dramatically in seconds. Trading blindly during high-impact news without preparation is like walking into a storm without checking the weather. Smart traders know when to stay out, not just when to enter. Impatience is another hidden problem. Beginners want results fast. They open trades too early, close them too soon, change strategies constantly, and never give themselves time to develop consistency. Trading is not about constant excitement. It's about controlled decision-making. Patience is not optional, it's essential. And here's something most beginners don't realize. Consistency matters more than perfection. Many traders search endlessly for the perfect strategy, the perfect indicator, the perfect entry. But perfection doesn't exist in trading. Losses are part of the process, too. What matters is managing them properly and staying consistent over time. Let me share something powerful. The market is not your enemy. It's neutral. It simply moves. The real challenge is managing yourself, your mindset, your discipline, your reactions. Most trading mistakes are not technical. They're psychological. And once you understand that, everything changes. On Forex Trading Rocket Signal, the goal is not just to help you find trades, but to help you become a smarter, more disciplined trader. Because knowledge without discipline still leads to losses. But discipline with knowledge creates growth. Think about this. What if instead of chasing quick profits, you focused on steady improvement? What if every trade was a lesson, not just a result? What if losing trades became feedback instead of frustration? That shift in mindset is what separates beginners from professionals. Successful traders don't avoid mistakes completely. Just make fewer of them. And they learn faster. They respect risk, they stay patient, they follow plans, they stay emotionally balanced, and most importantly, they never stop learning. So, if you're just starting your Forex journey, remember this: protect your capital, control your emotions, stay patient, and focus on long-term growth. Trading is not a sprint, it's a marathon, and every smart decision you make today builds a stronger future account. Now I want to hear from you. Which of these mistakes have you made before? Or which one do you struggle with the most right now? Share your experience in the comments. Your story might help another trader avoid the same problem. And if you found this helpful, share this video with someone who's starting Forex. Because one simple lesson can save someone from big losses. Thanks for spending time with me today. Keep learning, stay disciplined, and I'll see you in the next video.